Boris Schlossberg, Managing Director at BK Asset Management.
BK Asset Management's Kathy Lean.
Hello. Good morning, everyone. Here's a little messy today. I first want to start by doing a sound check. If you can hear my voice and you can see my video, say hello. Give me a thumbs up. Let me know that everything is working okay. Just gonna adjust my screens. Good morning, Sidin. Good morning, Terry. Good morning, Sandy, Peter, Cheryl, Snowman, Justice. Good morning. Hello, everyone. Okay, wonderful. So it looks like everything is working well. So we are good on the sound check. So today we are live trading non-farm payrolls. That's what all of you are here for. Now, who here has live traded non-farm payrolls with me today? If you have, give me a fist bump. Let's see. Have you live traded NFP with Kathy? If you have, give me a fist bump. What's a good fist bump here? Give me a fist bump. Let me know that this is that you've traded with me. If this is your first time, let me know that too. Let me know whether it's your first time with me or you've been live trading with me before. I know that many of you are coming over X. You can answer through X. You can answer through YouTube. Yes, Cheryl is here every single day trading with me. Welcome, Irving. Welcome for the first time. And it looks like, it's a good division. Some of you are here for the first time. Some of you have joined me before. Okay, and that's great. So, this is an example of how we approach news trading. There are many people out there who who don't tell you not to trade news, and they tell you not to trade the news for very good reasons, because there's a lot of volatility. Usually the spreads are wide and the movements are fast. But here at BK, we love to trade news. Now, normally the way we trade news, and if you've kind of followed what I've said before, you will know that I trade twice a day. I trade the New York Open and I trade the Asia Open. The New York Open for me, which is defined by the early New York Open, which is 6:30 a.m. New York time. So before the equity traders get in. This is just when the FX traders get in. So we are trading the early New York Open, which, on a regular day, like let's say we have a day when we have, like yesterday, we had ISM, for example, or jobless claims. We're trading in the morning. We made our money in the morning before the US economic reports come out. And oftentimes we're out. And one of the other things that is beautiful to trade, and actually my most lucrative trading session, is actually the Asia session. I love to trade Asia. I make the most money trading Asia. Have you seen my posts on, the zip charts? Oftentimes they're in the Asia session. And the reason for that is because you've got a lot going on in the US. Asia traders in Tokyo, Singapore, London, they come into the markets and they look at what happened during the New York session, and then they lay on the trades. So on a day-to-day basis, our zip track record where, we've had I can't even remember, I think no losing month in 17 months is based upon the discipline of trading the New York Open, the Asia Open. Now, I like to trade non-farm payrolls. It's not really a part of our zip strategy. It's not really part of our regular setup and trading plan. Now, what I always like to say when it comes to trading, have a plan, trade the plan. Focus on your trading strategy. Don't get distracted by anything else. So that's what we do, and that's why we do so well in zip. Now, with NFP trading, this is for fun. We've done very well for those of you who have been trading NFPs with me before, because we create a plan and we trade the plan. And I hope today is, just as good. But the way I trade on a day-to-day basis is we trade, zip at the at the Asia Open and the New York Open. So the most important part of today is having a trading plan. We do not put on positions ahead of non-farm payrolls because it can go either way. And, there are so many components, and I'm going to share my screen with you right now. There are so many components of the non-farm payrolls report that could really, quote unquote, make things go wrong. And one report may say one thing, another report may say another. And that's why it is always best to trade non-farm payrolls reactively. It's not like the inflation report, for example. It's like one and done. There's a number and there's really low, it's the number, there's less ambiguity. And, this is better than FOMC or ECB where you have to wait for the press conference and things like that. But still, there's a lot going on that could dilute the market price action. And especially for many of you who don't know how to interpret the data, it is always best to see the price action and then react to it. That's what I say, we trade reactively. So this is the plan today. I am going to lay out my trading plan. We're going to talk about the currency pairs that we're going to be trading. We're going to wait for the data to come out. We're going to put on trades. Then I'll be done with the Forex trades. Boris will join us and he will live trade the market open, the futures indices. And it might even be before the market open if I end the pre-market hours. He'll be trading gold, NASDAQ, and whatever else he sees that looks good. So I'll kick it off with Forex trades only, and Boris will come in with his trades. And I'm just going to call the trades out, but we're going to plan and we're going to prepare for this. Okay, so right now you're looking at my economic calendar, and there are two releases that are coming out at the same time at 8:30. We've got the Canadian employment report and we've got the US employment report. Let's knock out the CAD report first, okay? So as you can see here, the market is expecting weaker Canadian job growth, and they're expecting the unemployment rate to tick up. Now, Canada is one of those countries, and you don't see it here, but we'll see it in the headlines, that releases the full-time number as well as the part-time number. So it's not like the US where it's just one absolute non-farm payrolls change. There's a full-time number and the part-time number. And the full-time number matters a lot more than the part-time number. And, my FX book doesn't show it, but Forex Factory doesn't show it, but my FX book does. And my FX book shows you the markets, even though the market is expecting, full-time jobs to drop. This is really annoying, but they're expecting full-time jobs to drop by 10,000. They're expecting, overall employment to be weaker, full-time jobs to be weaker, the unemployment rate to be weaker. Now, yesterday we had IVPMI. I'm a big proponent of what I call the leading indicators for data. There are certain economic reports that help you predict other economic reports. Yesterday, the IVPMI index was horrendous. This is the weakest IVPMI index in, a very, very long time, since this whole table here, since February of 2023. The employment component dropped, as you can see here, 55.3 to 52.9. You can even see it here. It's a big drop from 55.3 to 52.9. So yes, the market tells us that the Canadian jobs report should be weaker. Now, if we look at dollar CAD, if we look at the Canadian dollar, you will see that right now, earlier the Canadian dollar looked like it was rallying a little bit. Right now, it's looks like it wants to firm. Nothing. Take everything with a grain of salt right now. But if we have, so we're going to be watching the CAD jobs number 2. If we have a weak CAD jobs report and a weak US dollar report, we're going to be looking at selling CAD yen. And I'm going to look at that in a minute. If we have a strong US dollar report and a weak Canadian report, we're going to be looking at buying dollar CAD. And if we have, it all disappeared. if we have, well, I will leave it out. If we have a weak, and if we have a strong US dollar report and a strong Canadian dollar report, we'll think about trading CAD yen, but I don't really love the way, CAD yen looks to the upside. We'll have to see. Right now, CAD yen looks quite bearish. CAD yen's in the sell zone. Dollar CAD is also in the sell zone. The way to interpret this chart is when the background, this is my zip chart, when the background is red and it's trading below the indicator line, it's in the sell zone. If the background is green, like over here, and it's above the indicator line, that's in the buy zone. So dollar CAD is kind of in the sell zone, but it's not below the indicator line. So, we'll see. CAD yen is below the indicator line. So if we do have a weak US jobs report and a weak Canadian jobs report, CAD yen will be the trade that we're looking at. So we're knocking that out. If we have a strong US jobs report and a weak CAD report, we're going to be looking at buying dollar CAD. But what about the US data itself? Now let's switch gears and talk just about the US data. So the US data, you can see non-farm payrolls growth is expected to slow from 256,000 to 169,000. How many of you think that non-farm payrolls is going to be, actually, you know what? I'll ask that question later. But US job growth is expected to slow from 256,000 to 169,000. Average hourly earnings growth is expected to remain unchanged. The unemployment rate is expected to remain unchanged. The fact that average hourly earnings growth and the unemployment rate is expected to remain unchanged means that there's going to be a surprise. If any of you have traded non-farm payrolls before or watched non-farm payrolls, you will know that oftentimes they do not remain unchanged, that oftentimes they are just what they are, that they will either surprise to the upside or surprise to the downside. So, it's very unlikely that both of these are going to remain unchanged. And then on top of that, you have the non-farm payrolls report. So the market is expecting weaker job growth. But there's also something else that kind of complicates the picture for today. And what that is that we have the annual revisions to last year's non-farm payrolls. Many people believe that the non-farm payrolls numbers from 2024 were overstated and that there could be downward revisions to non-farm payrolls. So many people believe that there could be downward revisions to non-farm payrolls for all of last year. And what that means is that if this NFP report is stronger and we get downward revisions and they're big, that could offset that. Alternatively, if the non-farm payrolls report is weaker and we don't get a downward revision for last year, then that may actually be positive. So that is going to complicate the picture today. And is another reason why it is so important to trade non-farm payrolls reactively. The other piece of the puzzle is that we had the wildfires in California, which led to, a lot of people not being able to work. We also had really brutal winter storms that also led to a lot of people not being able to work. So that is also expected to negatively contribute to non-farm payrolls, meaning that all of those are reasons why we may have a dollar negative outcome. But, this morning and last night, I posted this table here that shows you that, things aren't so bad. I mean, look at this. There's a table here that shows you the arguments in favor of a strong payrolls and the arguments in favor of a weak payrolls. And at first glance, you will see there's a lot more green than there's red, right? There's a lot more arguments in favor of a better report than a weaker report. So, for example, most importantly, ISM services, which the US is a service-based economy. ISM services reported stronger job growth in the month of January. And you can see that. What I love is Trading Economics, and I get all this information from Trading Economics. Go to Trading Economics and you just hit ISM employment. And you will see that we had very, very strong job growth in the service sector last month. And I'm just going to look at non-farm payrolls. And, that could lead to an upside surprise. However, if you go back to this chart, you'll see that in December, ISM employment dropped and non-farm payrolls rose. So there could be some payback this month. So we kind of we take that with a grain of salt because they misinterpreted the report in December. So maybe it's not so good. We also had a sharp rise in manufacturing jobs. 4-week jobless claims remain low. Challenger, Grady, and Christmas reported actually a drop in layoffs. So fewer people were getting laid off. And ADP was stronger. And the University of Michigan reported consumer confidence at an 8-month high. So the case for the labor market remaining strong is good. I mean, there's a lot of arguments for that. There's very little reason in some ways to think that the jobs report is going to be weak. But the case for weak payrolls, we did have a rise in continuing claims, which is important, but it's not as important as some of the other ones. Conference board sentiment did weaken. So one confidence report was stronger. The other confidence report was weaker. So it's a wash. JOLTS reported the lowest job openings from September. I think this is true. This is actually very important because job openings represent hiring and claims represents firing and non-farm payrolls represents hiring as well. So the JOLTS does worry me. And of course, the California wildfires and the winter storms worry me as well. So my point is that it can go either way. It could be stronger. It could be weaker. At the end of the day, the most important question to ask ourselves is, what does this mean for the Fed? Do you think a weak non-farm payrolls report will lead the Fed to lower interest rates next month? And I think the answer is no. I think that it won't be weak enough to lower non-farm payrolls next month. So I don't think that the jobs report is really going to change the mind for the Fed. So let's talk about our trading plan, all right? Let's look at dollar yen. Dollar yen, we got a zip sell signal, all right? But it's data, so it could go either way. If we have a good jobs report, we are going to be looking at selling euro dollar and selling Aussie dollar, because Aussie dollar is actually, trying to go below the indicator line. It's weak today. Euro dollar is already below the indicator line, although the background is green. If we get a strong jobs report, we get a weak jobs report, we're going to be looking at selling dollar yen and then also possibly selling dollar Swiss. And then of course, we've got our Canadian dollar trading plan, right? Remember with dollar CAD, we talked about how if it was going to be a good CAD report, I think we wrote it here. Maybe it got deleted. But anyway, if it's a good jobs report for Canada and a good jobs report for the US, maybe we'll look at CAD yen. But if they're both weak, we're going to look at selling CAD yen. If the US number is strong and the CAD number is weak, we're going to look at buying dollar CAD. So, and I'll add dollar CAD here. So we'll see. We'll see it in the price action before we see the data headlines.
I'll try to call it out as it comes out. Oh.
But this is our trading plan.
Okay. We got 7 seconds to go. Let's see.
All right. 5 seconds to go. Here we are. 8:30 week report minus dollar yen 150.
143 on the payrolls.
What is it?
143 on the payrolls. Private is
we sold at 151.56. We're closing at 151.38.37. So we sold at 151.56 dollar yen. I still think. What's the CAD number?
Sorry, let me find the CAD number. CAD number
it's very strong.
Yeah.
Okay, so this is going to continue to move lower, I think. So we had a very strong CAD report. Dollar CAD sell. We're going to wait for this. We'll wait for it to retrace a little bit. 142. We're going to wait for the retraces. We got 20 pips initially. Let's see if we can find the data real quick. So average hourly earnings actually increased. The unemployment rate increased. So it's not really all that terrible. CAD jobs was really, really strong. So we got the first bump up in the data. Boris, please find the revisions and let us know what they are. So CAD yen actually doesn't look so bad. I don't think it's a terrible report. You see this reversal? I like to go long CAD yen 106.37. I'm going long CAD yen at 106.37. And we'll digest all of it in a minute. Okay, let's see if we can get a little bit more on this move. And we have 20 pip stops, 20 pip targets on all of our trades. The dollar yen, you can see it's moving back up. Okay, so we know that's not a bad report. Let's see if we have any opportunities in Aussie and Euro dollar. So Euro dollar is already zip sold. 103.63. I like it. Where's CAD yen? All right, we're still watching CAD yen. We're in the trade. I like Euro dollar 103.63 to the short side. Let's see. So I am going to put onto my charts Euro dollar here and CAD yen here. Did we find the revisions?
I'm looking for
2024 average monthly gain revised to 166. So it was revised down. All you gotta look is Financial Juice. Financial Juice has all the information that you need. And we'll look at it in a second as we're watching our trades. Let's see what dollar yen is doing here. I'm gonna pop dollar yen there and a pop dollar CAD here. Remember, we sold Euro dollar at 103.63. I'm going to close it at 103.50, and but I do think it's going to hit 43 target. Just kind of grabbing. We are a little bit late to the move, but I do think it's going to work out. I closed at 103.53. So we banked 20 pips on the initial short in dollar yen at 151.61, and Nixer's drop. Then we revisited the data quickly, and we saw that the details were not so bad. Because remember, we had the average hourly earnings. Like I told you, this was not all going to be in line. Something was going to surprise. And the surprise did indeed come to the upside in average hourly earnings, the unemployment rate. Yes, non-farm payroll headlines was terrible, but there was an upward revision to the past month's report. CAD data was very, very strong. I'm going to look for the full-time CAD jobs just to be sure. Full-time CAD jobs, 35,000. The CAD labor market's on fire because the previous month it was up 171,000. So this is very, very bullish CAD in my opinion. Obviously CAD yen is not moving like we'd like, but let's see what dollar CAD looks like on the daily chart. Dollar CAD on the daily chart looks like we could, see a little bit movement lower. What if we pop here something else like Aussie CAD? I'm super bearish Aussie CAD because I think RBA is going to cut interest rates at their next meeting. So we're looking at the daily chart here. I like this Aussie CAD short a lot, 89.76, but more as a swing trade than anything else. But I do like it. So I'd like to sell as 83.976. I'm just taking a second to type this into our
interesting that gold
members room.
Gold dumped on the number and now starting to come back. This actually I think is bullish gold. I think it's buy the dip story in gold because interest rate futures have moved down. They're pricing a May cut instead of a June cut. So that should be bullish gold because gold obviously trades well on lower interest rates. So watching gold here, it's still in negative territory, but it's now doing a V-shaped recovery. I think it's worth a punt on the V-shaped recovery. Not a signal for me, but just as a reaction trade, I definitely like the long gold trade right now.
Okay, so you can see that there's a lot of hyper volatility. The market's still trying to figure out where it wants to go. We're short Aussie CAD, which I love. Looking at dollar yen, I think that obviously CAD yen is being pulled down by dollar yen. I think dollar CAD could be an interesting short trade at 143.02 as well. I would not touch dollar yen. I think CAD yen's already retraced 10 pips against us, so I think I'm going to square up the well, let's just hang on to it for another minute. My favorite trade right now is Aussie CAD to the short side. And then, let's see, dollar yen's just trying to figure out where it wants to go. If we look at dollar yen, we can see that treasury yields are up. So that's pro-dollar, not anti-dollar. Dollar yen looks like, it's still trying to figure out. So we're going to give it a little bit of time. Boris has joined us. And, do you have any thoughts to share, Boris?
Yeah, my main thought is, as I said, my initial reaction to this is a long gold off this sell-off. I think it's bullish. Gold is making a V-shaped recovery right now. So since I said it's up $2 since I said long gold. On the futures, it can probably go to 28.90 at this point. So I like it. I think it's a spike low, and I think gold actually recovers because net this is positive. Interest rate futures, as I said, are pricing a May cut instead of a June cut now.
Yeah, I think dollar yen looks like a sell. 150, 188, 89, 90. I think that it could move lower. Now, I agree that the price action is looking weak as well. So I've closed our CAD yen 106.20. We're just taking a wash on that. We're short dollar CAD 143.02. I'm going to put this on here so you guys know. So right now we're currently short. I should just use the minus symbol. Aussie CAD 89.76. Dollar yen we got to be really careful about.
It's a lot of two-way volatility. Yeah, equities are really not reacting much to it. NASDAQ is just kind of shrugging it off. Very minor sell-off here.
All right, so we'll watch and see how these things go. I'm just updating a stream if you want to chat, Boris.
Sorry, what are you saying?
If you want to talk, what are you doing?
I'm trading.
All right, why don't you show your screen then?
No, just
all right. Dollar yens are 151.77. We're short from 90. If you want to grab these 12 pips, you could. These are day trades, so we're in and out. But I do think dollar yen could move down further. And I do think that it could end up hitting our target at 70, which is not that far from where we entered. You want to share your screen, Boris?
Sure. It looks like a little, I do want to share my screen, but I don't want to, if you're going to do more trades, I don't want you to pull away because I think
we're not going to do more trades. We're just going to manage our current trade. So dollar yen plus 20 target already hit at 151.69.70. So all we have left is Aussie CAD and dollar CAD. So, we made money going short dollar yen. We made money selling euro dollars. We lost money going long CAD yen, but we made money going short dollar yen. And we're currently only in a short dollar CAD and a short Aussie CAD trade. So overall, we're still, we've got 3 out of 4 winning trades. And if we close the CAD right now, they're a bit of a wash. But, I do think right now, we've got the zip sell signal. Zip sell signal, zip sell signal in dollar yen is when we have the white candle, where we have the currency pair background is red. We've moved below the indicator line and we formed a white candle. This is what we call the zip sell signal. And this is if we're just trading on technicals, this is the signal to sell dollar yen. And you can see, it correctly foreshadowed the weaker NFP reaction, but of course, it could have gone either way. But that's what a classic zip sell signal looks like. And that's what we're kind of watching. We do have, right now, the zip sell signal in dollar CAD. Now it hasn't closed, so we still have 20 minutes before the candle close. But this is the classic zip sell signal in dollar CAD that we also like to watch for. Okay, so now I'll leave it back to Boris to put his charts back on the screen.
I'm just waiting because I knew you were going to take away my chart. So I'm just waiting for you to finish. By the way, look at this. Look at that V shape in gold. I told you. I said I like gold at around 84 when we first talked about it. This was about 5-10 minutes ago. It's up to $6 up since that move. Any of you who took that had a nice bank on it. I didn't take it myself because I got myself lost in NQ, which I resolved short then long. But saying gold was really the clean trade in my opinion fundamentally. If we're trading fundamentally, that was the call because, as I said, the sell-off was kind of a knee-jerk reaction on risk-off, and then once we recovered the moving average, and once interest rate futures started to go down, it seemed like a pretty clear V-shaped recovery. So I'm actually curious. Anybody take the gold position? Anybody do gold long on that call? Let me know in comments. I'd love to see it. We
got some questions while they're answering in dollar Swiss. So dollar Swiss is in the buy zone. And that's what I like about the zip chart. It's really nice and clean and easy to interpret. So dollar CAD is in the buy zone. And is above the indicator line. It looks like it's going to move upwards. Daily chart, we have moving average clearance on the upside. 4-hour charts, we're not buying into resistance. 1-hour chart, same story. So it all looks pretty good. And I do think that, U.S. yields, just have to keep an eye on U.S. yields. U.S. yields, what's really interesting is dollar yen is selling off and dollar Swiss is rallying. So perhaps the best opportunities in Swiss yen because the Swiss franc is selling off. The yen is selling off. U.S. futures are down. And if we look at Swiss yen, you can see that it is it is very deeply oversold. I mean, we didn't put dollar Swiss as one of the trades that we were trading because it's, the moves in the other ones were more interesting, in my opinion. And we did catch the dollar yen. We did at the zip sell signal and everything. But it looks like it wants to go up. And at the end of the day, I think that this will not stop the Federal Reserve from changing interest rates, from keeping interest rates unchanged at the next meeting. So, dollar CAD, if it goes down to 142.90, just take your 10 pips, which is pretty much there. I think, we're just getting the last bits of the move. For me, when I trade this stuff, it's, just immediate moves. And, usually I'm done by this time. And Aussie CAD is also forming. So dollar CAD's already got the plus 10 pips. Aussie CAD is also forming the zip sell signal, which I like a lot. And that's exactly what we are looking for. And hold on. Okay, so basically we made 20 pips in dollar yen. We made 20 pips going short euro dollar. We lost 17 pips selling CAD yen. We made 13 pips in dollar yen again and 10 pips in dollar CAD. So we're about 640 pips up on day trades. Not huge moves, but the directions were all spot on getting in and getting out for the Forex trades. Now we're only in Aussie CAD for the short side. It's at break even. And ultimately, I think, the story still holds. I think that for the most part, I think the dollar yen looks like it wants to move lower. I think the yen crosses probably look the best. I also still think that we could see some more movement lower in Aussie CAD, which is my favorite trade. All right. Did you make money trading?
Yeah.
Particular trades. If you did, give me a green heart. If you made money with green hearts.
or post it up in comments. I'd love to see it. I posted a lot of comments from people who made money in gold, which is great. My one call today made everybody money, which was super nice to see. Good job, everybody, on that. Gold is selling off a little bit now, so I would have banked the profits. Wait for the next rally. We need to clear the 200 SMA for us to really get completely bullish on this thing. So the knee-jerk move was a V shape. Let's see how it holds. Holding the higher lows would be good, but we really need to clear the red line and get a green triangle for us to really get bullish gold as far as that goes. Equities trading a little bit better. Where's equities? Sorry, here's NASDAQ. NASDAQ cleared the red line. Now it just matter of consolidation. Now we're going to be waiting to see if it can re-rally. I was thinking about why are equities kind of liking this move? I think the answer is that while the payrolls were soft, they weren't horrible. I mean, final demand is still very strong. And this obviously keeps the Fed much more in a dovish camp. They can lower rates a little bit more. The only thing that I think is disconcerting, I was actually going to ask Kay about this. Why, 10 years are up 3 basis points or 3.2 basis points. Why do you think yields are up off of this thing? What do you see there?
Well, yields are, they initially spiked higher, but they're actually coming off their lows.
I mean, coming off the highs.
So they're coming off the highs. So and that's why the intraday movement is so important. If you look at the 5-minute chart, but it does look like it wants to go higher. And the reason is because ultimately the question that I asked at the beginning, will this change the Fed's minds? And the answer is no. That's why I think dollar Swiss, I don't think the dollar is going to pull back that much. I think dollar Swiss looks good to the upside. I think the yen pairs, I got out. I think the yen pairs, and it did hit the plus 20 target at 150, 170, but I got out, and I don't think there's going to be much continuation. Yeah. Another mutant says that he made 20 pips with Kiwi yen from Zip. Apart from these trades, yes, I love double zip sell signals. 1 zip sell, 2 zip sell. So, there's definitely, Zip keeps our minds clear, in my opinion. And that's why I keep on flipping to these charts, because you can get so confused and diluted from, having too many indicators on your charts. And if you want to learn more about Zip, I'm going to pop the link into what is Zip. I'm really excited. We're changing our community completely, and it's going to be really good.
And really cool things coming, guys. It's coming very, very soon, and we're very excited. It's going to make your life and our life so much easier. It's going to be a really great experience. Chuck makes an interesting point about the yield. Previous month upward revision. It's true. Previous month was actually
and that's what I'm saying. Ultimately, let's take a step back.
Yeah.
Does the number, and let's look at the number. Where's the number? Does this number make the Fed want to cut interest rates in March or April? And my answer is no, because most importantly is this average hourly earnings. It jumped to 0.5%. This is inflationary. This is the biggest jump since February of this year. This is the biggest increase since February of this year. It's a huge jump. And you add that to what did unit labor costs? I forgot what it was. That was weaker, but still pretty high. And you add to that, and the fact that inflation is still sticky, and the upward revisions, and that all of that tells us that it is not going to be it's not going to be dollar negative. And so I think this dollar Swiss trade, I think the euro dollar short trades, I think they're going to work. I'm going to officially say this. I think that the ultimate outcome is that we're now going to be looking for dollar strength. That now we're going to look for the dollar to rebound from now to, I don't know, next hour or 2 or 3, whenever you finish trading. So, like Wayne said, I'm looking for euro dollar short. And for me at least, we have gotten into the zip sell zone. The background has turned green. It's dropping. I think that these are now going to start to fall. Aussie CAD that we're in is sheltered from all the storm, so we don't need to worry about the dollar, which I love trading crosses. But for the dollar perspective, I think that minus euro dollar, and this is not, the background hasn't turned green. I think that the dollar is going to start rallying, leaning to euro dollar falling, dollar Swiss working.
There's a question there if you can get ZIP as a member of BK, and I answered yes. I put in a discount link for everybody in case you want to join us. You can use the discount link, and you will get ZIP, and you will get Scalper. So yes, absolutely.
All right. So for me, I'm open for questions. I'm done trading. We only have the Aussie CAD trade on as kind of a theoretical swing trade. We've done well. We hit 4 out of 5 winners this morning trading NFPs. And the reason why we did is because we had a trading plan. We prepared. We created it. We talked about it. We created a trading plan and we executed our plan when the data came out. We talked about the currency pairs we're going to focus on. We talked about what we need to watch for, and then we executed. So basically, my mantra is, doesn't like me, but basically prepare, plan, execute, and that's what we did today, and that's why we made money. And that's the way to trade news, is to not just look at the price action and jump in, but to plan in advance accordingly. And that's what, and that's what I hope you understood from today. And that's what I hope you understand, why we made money. And we also, used ZIP to keep our thoughts clean and not get diluted by shorter term price action. All right. So if you have any questions, let me know. Otherwise, Boris is going to start trading gold and in this season looking for opportunities there.
All right, just took another, you saw it took about $80 in gold really, really quick. I'm going to talk a little bit about sort of what I've been doing. Punch and run away, punch, run away is my my style lately. I'm going to show you my P&L for the last day or two and show you how, basically, if you made $100, if you made 50 to $100 a minute, it really adds up over the length of the day. And that's kind of the quick jabs that I'm making. And making very quick jabs also because, like you saw this gold trade. This is a massive risk, right? This was like a freaking $3 risk. What is that? $85, $5 was a big ass risk. I really didn't want to take the risk. I didn't want to hang in this trade for possible. I knew there was a strong chance of continuity because really that's what are we trading for? These all signals are all continuity signals. But how much continuity there is always very problematic. So if I can get a decent, $70, $100 continuity in a minute, I'll take it. So that I'm not stuck in a much larger risk trade. Another thing you could do is you could just say, well, I'm not going to take the trade because it's a big candle, which is probably the smart thing to do. But whichever way you do it, you have to know before you start the trade, what is it that you're seeking? A lot of people have been asking me, what is your stop and target? There is no stop and target. I mean, there is always a stop. There is no target. The target is always a moving target. The stop is always fixed. That's actually, boom. That's my mantra for the day. The target is always a moving target, but the stop is always fixed. If you remember that, you will survive to live another day in trading. And that's the key thing to kind of running these trades. Here's another one in Nasdaq right now coming out. I should probably take this. Let me see if I can take it. Okay, I'm a little bit underneath. So I'm underneath here. Let's see if I can just squeeze it out. We'll see. I'm not sure this trade is going to. I'm a little, one of the things that I truly try to improve myself on, and unfortunately I can't because I'm trading live with you guys and I'm not paying attention, is execution. The trade should have been in here at 64, not at 67. I would have already been halfway to profit if I had this price entry at the proper entry. And it's very important not to. If you're late, you're wrong, right? If you're late, you're wrong. And I'm late to a lot of these trades because I because I'm not, I'm doing other things. I'm talking to you guys, and now I'm just a little bit annoyed at myself that I took the trade because I missed the trade over here. I shouldn't have taken it two candles over. Okay, I should have been in this trade over here. So just a good, if I'm probably going to eat this trade as a result of it. Actually, you know what? I'm gonna give myself. I'm gonna take myself out because it doesn't matter if it goes or doesn't go. I was late on the entry. I had a bad entry. I shouldn't have been. My risk rewards were not proper here. So here's what I want to show you. Let me see if I can pull this up. Hang on a second, guys. Let me get it on my other screen. because I want to show you the actual run, so you can, you don't need to trust me on this. You need to believe me here. I wonder if can I do this custom range? Custom range. That's what I want. Okay, I want custom range. Hang on a second. So I'm going to go from yesterday to today. I want to go from 12 noon yesterday, just from 12 noon yesterday to like around 9 o'clock today. Let's see if I can get this going. Yeah, there's a fuck ton of trades. Here we go. Is that right? Is that all there was? Sorry, let me just make sure that I have all these trades correctly done. It's probably, I think I want to do a little bit earlier just to show you more. Yeah, okay. All right. Okay, so let me show this to you guys. And by the way, you see the trade is working, but whatever. Okay, so this is, I specifically, you guys can see this on my screen, right? Everybody can see. Am I showing this to you? Oh, how come it's not showing? Oh, I know why. Hold on. Let me show you. Sorry, I'm gonna share a different. I'm gonna share a tab with you. Okay. All right. I'm just gonna share this with you now because we got a half hour before. We're gonna take a break from trading for the next 15-20 minutes before the market opens, right? And I want to just show you the methodology because this is a good time for us to look at methodology before we go back to with trading. So I specifically just took a custom range yesterday from around 12 noon, midday yesterday, to like around now. The point is, it's just a snapshot. It's net about $1,000, but I just want to show you what I'm what I'm doing. It's tiny little trades. It's $50 here, $100 here, 175 here. You see these trades, occasional losses. I took a little bit of a clip. This was a post-event, post-NFP clip, and I knew that was going to be a big volatility, and I reversed myself over here the other way around. I pretty much made it back. But you see me basically just clipping 80, 100, somewhere, let's say an average of $70 a trade. And you're talking about, how many trades did I do? 25 trades, 19 winning trades, blah, 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 so on and so forth. That's the idea. The idea is, $75 a trade, 19 winning, 20 winning trades. That's, let's just say $100 a trade at $20 a trade. That's 2,000. Then you lose another 1,000 in slippage and losing trades. It's net $1,000. It really adds up. It's just a very, very low grade way of trading. If you look at the P&L drawdown here, it's like $300 was my max drawdown against a $1,000 run up. Now, generally, that's extremely good because I just sort of been really in the zone and plucking my trades pretty well. But the rule of thumb that you want to have is if you're 1-to-1. So if I'm up 1,000 and my worst drawdown during the day was down 1,000, you're doing a good job. You're actually doing a good job. Don't beat yourself up over that. That's baseline, and anything above that, which is this is a 1-to-3, where I'm $300 down, $1,000 up. You're doing great, but you're doing this in a very, very methodical, small fashion. These trades. Look at these trades. A minute, 25 seconds. A couple of these trades took a little while. Some of these trades, I think this was like, Asia session took a few minutes to resolve, but most of them are like, 15, 20 seconds, a couple $100. That's what you want to do. That's the scalper's way. That's the ideal way. All right. So let me stop sharing this. And let me start sharing my other thing. Let me just take this back. Hang on a second. Bear with me. And I'm going to share my screen back again. Share screen. I'm going to go to window. This one. Okay. All right, cool. So is that clear to everybody? everybody understand what I was doing, what I've been doing, how I'm doing it, where I'm getting my P&L from, all that kind of stuff. Any questions on this while we're sort of watching the price action unfold here a little bit? Not a lot of directionality going on over here. You see gold, it's stop and go kind of trades. Looks a little. I mean, I'm happy to take this, on the short side if I can, if it pops up here. I think it's worth it. Let's see. All right, we'll sell it here. Big risk underneath here, but again, look, I'm just going to take the 80. I'm going to take the 100. I know that it can go further. I don't care because again, if it doesn't go further, it's a $300 loss. I'm not interested in taking the loss unless I absolutely have to, right? Until I absolutely have to. So great. I took another $100 in a super fast win. Beautiful. Just add to my P&L. Let it go. Remember, it's only like 10 of these $100 trades, and you're up $1,000 a day. It's not, it's not too difficult as long as you got the signals, as long as you're relatively disciplined, and as long as you're quick to take it when you got it. Because remember, there'll be plenty of times where you're not going to get that opportunity. It's going to retrace against you. You're going to have to work your way back out to rework those those losses. It's not all candy and roses, but most of the time it is, as long as you stick with the signals, and that's the key thing. You don't need a lot of size. You don't need a lot of movement to kind of make the P&L that I'm talking about, because we're always just the analogy I'm always using is, what is that? The hummingbird, right? The hummingbird you'll never kill a hummingbird because they always take the smallest bite and they fly away. They fly away. They fly away. Any questions, guys? Anything? Anybody got any thoughts on right now? No. And yeah, for those of you guys, I wanted to talk also. So while I have you, let's before the markets, we've got about another 20 minutes before the markets open up. We'll see how they play out. So my way of trading, and I'm going to take off all my trades because they just start to get obnoxious, on the chart. So we will just get rid of all the executions. Otherwise it will look like a St. Valentine's Day massacre. But as you can see, I mean, let's imagine this not non-farm payrolls, but just you can see. Look at gold. You're literally looking at like 5 or 6 or 7 signals in this particular hour. That's an unusual hour, but let's imagine there's at least 3 signals per hour. I actually think is a signal every 15 minutes. It's about 4 signals per hour. And let's imagine we're just trading gold and NASDAQ. So that means 8 potential trades an hour. Obviously, not all of them are going to be successful. Sometimes you can have 2 or 3 unsuccessful. But the net idea is, let's say $100 a trade, 8 potential trades an hour. It's potentially $800, of which you're going to, probably feel lucky. You lose 2, win 4. Let's just say it's a $200 kind of a move. Couple of hours, you're up $600. This type of approach and this type of sizing with using 1, 2 contracts, 3 contracts if you absolutely have to go, is totally viable on the Apex $50,000 account. Now I'm trading the large account, right? So let me just pull up my Apex stuff so you guys can. Where am I? Here we go. Let me put myself in here. There we go. Feel free to use the code. Let me put the link into the description here. Okay. So the key thing that I was saying here, hang on, let me just do this correctly. Okay, here we go. Is yes, you can do super fast, all of these super fast trades, but you don't have to. You can certainly do it. Oh, you know what? This is a pretty good trade. I kind of like this trade. Let's take this trade because I think NASDAQ looks like it wants to go. Looks like it wants to go higher. If it works, it works. It doesn't work, I'm not going to cry about it. This is a reasonable trade underneath here. Green signal. Green signal means that it's a particularly, it's not a suit, green does not mean it's a winner. It just simply means it's a stronger buy signal than a black signal, because both the slope, that means the last 3 candles have generally seen buying pressure on it, and now we have a buying signal. So it's a kind of a stronger buy signal than just a black signal. So whenever I see that, especially now, I kind of like it. It looks pretty good. Let me move this up. Let me see if this thing, I'm just going to stick over there. It's either going to hit my target or it's not. I'm going to let it play out. Let the trade go here. But you see that it's like the separation between each candle is 5 minutes, 10 minutes, 10 minutes. So that's like potentially 6 signals an hour just in NASDAQ alone, if you're trading this way. And because your losses are small and your jabs are small, you're really not you're not any way, shape, or form hurting, really blowing up your account, right? And as long as you sort of stick to the disciplined approach and you use the indicator the way I designed it, and if you're super disciplined and just simply only take the greens and the reds, you're generally in good shape. Obviously, you're not going to take the anything pre-event risk, because all of that is just garbage. It doesn't matter if it's a green or red. It's just going to the volatility will kill you. And also pre-market here, this was all really flat today. Really flat today. There was not much to do. Although I did manage to actually do a little bit of trades here, because this was continuity. This was continuity. This wasn't continuity. And this one was not continuity. So, again, just because it was green does not mean it worked. So it just stopped me out. But it was a small stop, and it's fine, because this stop was tiny. It was like a 78, like an 8-point stop, right? So now I'll wait, regroup, and take the next signal at a little bit larger size and try to get it all back. Try to get it back on that trade. All of this keeps me very much in sync with the market. Caleb says, Boris, can you remind me why you quit looking at the dashboard on your scalping indicator? Hang on a second. I watched the video where you discussed the dashboard. I remember you quit looking at it this week. I only quit at looking at it because I just, the dashboard, I know what a dashboard is telling. Like everything I'm looking at, I understand the dashboard from the signals over here, right? So I don't need, like, the dashboard. I'm happy to put it up for you guys. Here's a show dashboard. I'm happy to put it up for you guys, and you guys are free. I mean, many people may find, I just find it distracting for myself, but I'm happy to put this on there. But everything is told to me visually. Every indicator inside this dashboard is visually created. Let me just, I'm going to get long again on this signal if this thing holds. If I get a black candle. Okay, so now I'm long again. Let's see if I get continuity here. I'm behind this candle over here. We'll see if I get a little bit more of a push here. Sometimes the first signal isn't going to work. Sometimes the second signal works. Sometimes the first 2 signals fail. There's just no continuity. You have to be patient. Eventually, these signals will bear you out. If you look at TradingView, this is the take profit number. The red number over here is a take profit number. The red number over here is a stop number. Just so you can understand how TradingView puts those things on there. A lot of times, I mean, I will say one thing I did wrong on the prior trade. I'm probably doing it wrong on this one as well. Is generally, in higher volatility times, there's two ways you can put a stop. You can put a stop right underneath the trigger candle, or the more intelligent way, in my opinion, during high volatility times, is to put the stop underneath the candle next to it if it's a lower stop. If I had put my stop over here, I would have still been in this trade that I was in. I would have still been carrying this trade as is. You can see me, and I'm just questioning myself with whether my stop is in the right place right now. I'm going to leave it here just because it's market open. If my stop gets hit, it's probably going to get hit regardless. So I don't really need to increase my stop. But a more intelligent way of sort of ensuring that you have a really proper positioning on the trade is to put the stop. You see, this is the trigger candle over here, right? And this is the candle prior to it with the lower stop. And this is the zone of risk you want to give yourself if you're sort of really reasonable as a trade. That's the maximum zone of risk you want to give yourself. Had I done that over here with this candle over here, here's where I would have been on the stop over here. I would have been in this stop over here. This trade, which clipped me out, I still would have been in it, and I would have actually been, net positive right now in that trade, probably trading it up. So I messed up a little bit on the technique here, and that's fine. You're going to make mistakes all day long. The mistakes will be small. That's the key thing. You're just going to, none of your mistakes will be terminal. That's the whole idea. I was thinking today that, so does that make sense to everybody? So give me some thumbs up in the room to let me know if you guys are understanding the techniques that I'm showing you while we're sitting in these trades. Pre-market, trying to see if we can get any kind of resolution. What time is it? We've got 18 more minutes to go. It's just going to be like a snooze fest until then. So while this is in play, and I'm gonna go off screen here not to go off screen, but I'm gonna leave. We know you guys see what trade I'm in. You see what I'm holding. It works. It doesn't work. Well, it's all preset. 89.50 is the target. It hits. But what I was going to say is, for those of you who don't necessarily have the ADD personality of a cocaine-addled monkey like I am, a more languid, intelligent structure is not to take the 1-minute signals, but to take the 5-minute signals. There's two reasons why the 5-minute signals could be more appropriate to a lot of you who don't necessarily suffer from ADHD, which is that, they're not coming up every 5-10 seconds. They're usually coming up, I would say, probably one an hour, maybe one every. Matter of fact, you could make the argument they're really not coming up there. They let's just do this from yesterday. Yesterday's sort of trading day, which was a very choppy day because it was pre-NFPs. And if let's say we're only looking at color signals, not the black ones. So there was, okay, good. So we got with the 89.50 hit, we resolved the trade, blah, blah, blah. I'll show this to you in a second. But more importantly, here's what I want to show you. So on the 5-minute chart, you have a 1, 2, 3, maybe 3 or 4 signals during the day. So it's a much more languid pace. First of all, all of these things are alertable. You can put the alert on there. They're all preset, right? You can say basic buy trend alert, basic sell trend alert, set those alerts up there and let them play. And that actually creates, an interesting possibility. Here's another. So it was actually the 1, 2, 3. Basically, the meat of the trade here was, 3 or 4 signals on the trade. Let's go back. I'm just curious. This was a more legitimate day. What was it? It was Wednesday, right? Wednesday was a more legitimate day. We had news. We had actual movement. Anytime you get more than 0.5% to 0.75% move in the underlying, in the index, you're going to get better signals. So this is like, let's say this is a good day, good trending day, good day for continuity signals. We're talking from 10 o'clock until 3 o'clock. You had one, and if you were, if you were looking for black signals as well as green signals, you had a few. You had like 1, 2, 3, 4, 5 signals. Let's say between 1 and 3 signals a day. And the key thing that I was going to say is these are much bigger, more meaningful moves, right? So this is a 50 point target on the move, and obviously it extends much more than 50 points. But if you were sort of using my rule set, which is I'm going to use 70% of target, this is still like a 30 or 40 point move on NASDAQ. And so one trade at 30 points is $600. So if you want to turn the scalper structure much more into a swing-like structure, or you simply want to put this on the micro contracts and just try to go for 100 points on the micro contracts, you could easily do that off the 5-minute chart, because the signals on the 5-minute chart are going to be about 1 or 2 or 3 per day, but they're going to be more meaningful and more useful. Back to the regular scheduled programming, and you see that worked out. So this sequence of trades in NASDAQ, this green to black, it basically was a scratch for me, which could have been a win. And the difference between a scratch and a win was just technique. I put my stop. I should have put my stop over here, right? But it's fine. You're going to make mistakes. But in a higher volatility environment like today, where you have non-farm payrolls and you expect some sort of move, some sort of bigger movement in the trade, you want to put your stop at not at the trigger candle, but the next to the trigger candle if it is a lower move, or if you're shorting, it's a higher move. So that gives you a little bit more of a technique. Somebody was talking about Whale Myers talking about gold in a 5-minute. Gold in a 5-minute. By the way, gold is sort of, I think, a really good. Gold is really actually a very good instrument for the 5-minute. Many more signals. Those have some clean, clear continuity and discontinuity moves here. All of that I think is just like here's a short signal post gold that worked nicely. This was the high. This was the continuity move to the downside. Now I think we actually have a reversal, and if we get a green signal to the upside, it's probably going to be a good continuity signal for gold. Here's some signals from yesterday that are very, very clean gold continuity signals, right? All of those things really work. Here's a gold reversal signal, which is also like look at this great reversal signal. Whenever you get that exclamation point, that means it's a reversal buy. You have a super, super steep sell-off, and then it reverses buy. And that's an actually excellent looking reversal signal here. Look at the continuity signals on the 5-minute chart in gold here. You're talking about $5, $6 on each one of these. So gold is a good quality instrument for the 5-minute chart. It really works nicely. Right now, we're just basically recovering the 200 period SMA and looking positive. Just looking positive on gold. NASDAQ is already in positive territory, so we'll see what we can do. NQ movements scare you. Well, one way to not scare yourself, Will, is to do what I'm doing, which is just, if you're of that mindset, which is take small bets, small profits. Like on my trades are like 1 minute, 2 minutes, 3 minutes, right? I'm in, I'm out, and then I'm back to the sidelines. What is it? Fly like a butterfly, sting like a bee. Be Muhammad Ali. That's the Muhammad Ali way of trading, right? Boom, boom, and I'm out. Boom, boom, and I'm out. That's really what I'm doing, right? Whale says it's 11:30 a. It's 11:30. Oh, it's 1:30 a.m. Oh my God, it's 1 o'clock at nighttime. I know, Whale. I hear you, my friend. I hear you. It's tough to trade New York out of Australia. I hear you guys. So what's up? Let's do a poll today on how your week has been. Right? You guys want to do that? Let's see how your week has been. I'm just curious. Let's do a poll. My week was. I had a couple of people pass like five prop evaluations they got funded for 5 accounts, which is really, really good. Was good. Was let's do this. Let's do it. Emoji. Fire. Oh, my week was negative. Okay. We're not even going to communicate in words. We're going to communicate in symbols. Let me know. Let me know. All right, I'm going to connect my trading view. By the way, I'm just curious. Give me a thumbs up if you guys like the new way of me trading directly off the trading view charts. I think it makes it a lot easier. It's also a lot more transparent for everybody to see, what I'm doing, the trades, how the trades are getting set up, what I'm going to, take as a setup, blah, 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 so on and so forth, right? Let me know if you guys give me a thumbs up on that if you like it, because I've been doing it this whole week, and I think I'm going to stick around to keep trading off the trading view charts. I got to tell you, so Whale Rider is saying that there's a lot of random movements in the markets, and he was trading China, and it's a lot of generous. Cheryl says she loves. Thank you, Cheryl. A little love from Cheryl. Come on, you bastards. I want more love from you. Let's go. I want more comments. Let's go. We got 8 more minutes before the market even starts to move. You got nothing else to do. Give me some love. Thank you, Cheryl. I do like it. I think it's really, really good. Okay, Raul. Now I've shamed everybody. I've bullied everybody into giving me thumbs up. That's exactly what I want to do. Thank you, guys. Okay, thanks, my friends. So no, I was gonna say is Whale Riders is talking about the fact there's a lot of randomness in the markets, so on and so forth. This week I had a chance. This week was the 30th anniversary of the Barings Bank collapse, the single greatest. I don't even know what you would call it. Rogue trader event in the history of the markets, where a single trading individual hid their losses for so long that it broke down literally the bank, not the Bank of England, but the Bank of the Queen of England. This was the private investment bank of the Queen of England, and it blew them up. It's the 30th anniversary. I got a chance to sit down for an hour with Nick Leeson, who is the rogue trader. Many of you, if you're old enough, you remember him as clear as day. If you're young, you probably don't know who he is, but he really was he was the pivot. He's the guy that basically created this whole big, massive loss. And it was an amazing interview. It was so fascinating. We're going to cut it. It's going to come probably in about a week and a half, but watch out for it. Watch out for it. I'm going to run it. It was for the trading battle, but I'm also going to run my own version on our channel. So just come watch out for it. It was just, he got relaxed. He told me a lot of stuff that was not public information. Really, really fascinating. Just a really fascinating deconstruct about life, markets, risk, and everything else. Super, super interesting conversation. So watch out for it. I'll let you guys know when we publish it. No, he did not die from cancer. No, he beat cancer. He's lives in Ireland. He's a good guy. It was a really, really fun conversation. So I'll let you know. Look at gold, guys. Did I tell you? Look at this baby. Gold is really popping. We just don't have a signal because we're waiting for it to retrace and come back and recover the trend. But gold clearly recovered the trend. If you guys just sort of took the 200 period SMA breakout on this idea, really gave you a good idea. You know what else, by the way, I noticed? This is a really cool thing. Really, really cool nuance of scalper. So failed trades in scalper, failed trades, very often give you as much information as winning trades. What I mean by that is if you look at these, the reds, there's a failed red here, very little continuity here, and really failed trade here, right? Just complete no continuity whatsoever. That really tells you that there is just no selling pressure whatsoever. If you had all this sort of, everything aligned selling wise and the trade failed, that alone is actually sometimes a better signal than the actual signal. Like the failed signal very often is a better signal than the actual signal. And the very fact that this kind of failed over here really gave you lots of confidence that this was, the market is going the other way because the move was, is totally turned around. Now we got, I'm tempted to do this, but I'm not going to do it because it's just there was a like it's just peaking to a possible buy. But we got 3 minutes to the open. I really have zero interest of trading into the open and getting my head handed to me if it goes the other way around. So I will refrain from any trades for the next couple of minutes, and then we'll see what we can do as far as structure goes. Oh, sorry. What I just do here. Sorry, I'm screwing around with my screens. What I just do here. Okay, sorry. I gotta just bear with me a second, guys. I'm trying to do something. My TradeNFP platform. I accidentally logged myself out. Okay. All right, coolio. Signal here, we're not going to take it. Tempted as I am to take this signal, we're not going to take it if it's there. Gold, by the way, rocketing. If you guys long gold, you're certainly doing well. Good for you. I did not have a signal here, but it's definitely working. Do I have any opinion on palladium? No, don't trade it, my friend. So the other, the other thing I was going to say is, so this is a black, just to people who are new to the way I trade and to the BFF indicator. Both black and greens are buy signals. The black signal is a little bit more neutral because what it says to you is that there was selling pressure before the buy signal materialized. Now it's obviously market is opening up in a minute. There's a little bit of buy pressure on the open. So you can if this is a 70% weight, let's say this is a 60% weight, maybe this is 70% weight. Those are arbitrary numbers, but it's just a relative strength description of the confidence weight of the signal. That's all it means. They're both legitimate buy signals. In fact, very often the black signal sometimes can be really good buy signals because they kind of show a V-shaped recovery. But the point being is that this has a little bit more confirmation behind, more buying confirmation behind it. That's all it is. Just to let you know, I got about 50 seconds left before we open up. Let's see what the market's just honestly really not that enthused, right? We're Nasdaq is up 5 basis points, nothing. I think what's happening, by the way. This is what I'm looking. Look at the fucking yields. 449.1. We're almost at 450. That cannot be positive for equities. That's got to be just. It's hard for equities to trade through that because 449, 450 on the 10-year. You want to be at 425. It's interesting because Trump, Bessent came out yesterday, said something interesting. He said Trump doesn't give a shit about the Federal Reserve. That wasn't quite the words he used. But he said he doesn't really care what the Fed does as far as lowering interest rates. What he wants is a 10-year to go down because that's actually a smart call because it's the 10-year that really matters as far as the broad swath of rates. And also the 10-year obviously competes for yield against the equity base. So it's important to watch that. I think this is going to be a much more important figure to watch in the Trump administration than watching the Fed rates, because he's focused on getting that down now. So that's what's going on. All right, 9:30, whopping 10-point move in the candle. Gold through 2,900. Gold continues to rock and roll. No signals for us because it's just a vertical move in gold from 2880 to 2,900. Gold just really. Anybody long gold right now? Will says gold by break all-time high. I agree. It'll be interesting to see. It will be interesting to see. NAS breaking up a little bit higher. That's pretty good. Through the 2,900. Not much going on here, guys. Look at that pop. Good extension. Wow, nice move on NAS. So they're ignoring the yields, and I'm keeping an eye on gold here to see if it comes back down, comes back up, gives us any kind of a buy signal right now. NASDAQ is fully extended. So how's everybody's week? How was everybody's week? Let me see on the poll. Wow, 58% was fire. Good job. All right, let's end this poll. And let's every one of my bad impulses now, kicks into my thing, because at 950, I'm really tempted to just want to short this thing. All right, I'm going to do it for shits and giggles. Do not do what I do. Do not do this. But I am just going to do it for shits and giggles over here. Let's see if I can just pick up quick scalp to the downside. No. The only reason I'm doing this is because it's super extended off the 8-period SMA. And always, it's a bad thing to do. Because the more extended it is, the more extended it's going to go. So don't do what I do. I'm going to eat this trade, but I have to sacrifice to the counter trend gods just a little bit. Oh, the counter trend gods were kind, and I clipped about $50 on the counter trend move. But really, don't do this. It's as stupid as stepping in front of a highway or F1 race, hoping that you're gonna miss the car. I love to do this trade. I always pay dearly for it, but now I've learned to just cap myself at about 10 points above the high, and that's it. It's either going to do. The most interesting thing I said today, honestly, this is really like the most interesting thing that I can tell you. stops are always fixed. Targets are never defined. That if you can just remember that, you will be always in great shape. What happens with most people, why most people, as in fact, almost every amateur trader loses, is because they have a fixed target. They are fixed on making a certain amount of money after each trade, and their stop is always wobbly. Their stop is always, oh, I need to move it down. I need to give more room. I need to take it off. Right? Everybody's always focused on the wrong end of the trade. All right, let me go back to my double screen over here. So gold, everything is just, pop, 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 which is nice to see. Gold now, I'm looking to see if I can get a buy signal coming in here. So gold did hit came almost to 2,900, backed off. Let's see if it consolidates, tries to make a second run at the highs. How much time do we have? 59 seconds. Oh. All right. This gave me a green signal. You know what? I got to get rid of this dashboard, guys. This fucking thing annoys the shit out of me. Get out. Ah, fuck this dashboard. Okay. So guys, use the dashboard at your own end. When I'm trading, I need it the fuck out of my way. I absolutely talked about this yesterday, the Lawrence Taylor way of trading, which is get rid of anything that interferes with your trade section. We go, look at this move through 2,900. Look at that move. Hope you guys took that trade. That was like a $300 trade. I only took 100 out of it, but fuck it. I'll take what I can get. That was a good, clean, look at that nice, clean signal and a good, clean move right through the highs. It's a good trade. You guys took this trade? Who took that trade? Give me some thumbs up. Give me some gold stars in chat. Give me some gold stars. No? Will is out. A lot of you guys did a great job with gold today. Gold has been the best call for the day today for me. Yeah, you can hide the dashboard right over here. You go into settings, just you show dashboard, puts it on, unclick it, takes it off. You can also move it around. I mean, you can move it around to different places. You can go show dashboard, and then if you want to go bottom left or bottom left, it'll show up over here. But I just think actually probably I guess this is okay. If I left it over here, that doesn't bother anybody, and you guys can see it, right? I guess that's probably the better thing to do it. I just it just annoys the fuck out of me. Everything goes to super trend territory now. I have a reversal signal in NASDAQ. I usually don't. I told you I generally don't take reversal signals because not that they don't work, but they just don't work as reversal signals are great when they're usually like the second or third reversal signal. Usually the first reversal signal is always a false one, meaning that we get more continuity. Of course, as I say that, it's probably going to be a good one, but we'll see. Francis, you the man. Where you from, Francis? Oh man, that was a great gold trade. That was so much fun. What did I do on the gold? Let me just see. I just go to settings. I'm just curious on my executions. Sold this here, bought 97. Yeah, that was a great move. 97, that went all the way. That could have been like a $3 trade. I just, I gave it out a little bit earlier. But I took good 2 quality sell signals and a quality buy signal, and I did not fuck around with anything in between, which was good. And this was this was just me scalping over here, and this was a good quality buy signal. Yeah, generally, if you look at my trades, this is another. By the way, this is a good thing. How to do a self audit, right? Sorry, I'm gonna spit out my gum before I can't talk and chew gum at the same time. So a good way, especially if you're trading TradingView, right, to do a self audit of, did you do good trades? By the way, definitely a buy opportunity here, or bad trades, is to take the trades. Obviously you can take executions off. You simply go to right click, settings, executions off, and now you don't have any trades, because you don't want the chart to be all busy when you're trading. But at the end of the day, or maybe after a couple of hours, put the trades back on and see how closely they match against signals. If you're taking trades against signals, you're doing a good job. You're on process. Oops, and I'm late. Fuck. Okay. Fuck. I'm late on the chat. I can't talk and trade at the same time. I needed to be in this trade. Okay, let's just take this. Fuck it. I'm taking the trade very, very quickly. I see this out of the corner of my eye. What you want to do is, with 5 seconds left, you got the signal. You want to set everything up, the take profit, the stop loss, the button, so you're not late to the entry, right? I was like, a point and a half late. Still, it doesn't work. It doesn't matter. The trade was good. We made the trade. It was on process. But that's a really, really good way to do a self audit. Am I on signal when I'm taking this? You have let's say 10 trades today. Were they all on signal? It doesn't matter if you win or lost. If they were on signal, you did a good job. You did a good job. That is probably the best, easiest, most interesting visual way to do an audit of your trading. Is there a video of my indicator? I made a video. It's a little bit long. Let me put it up here for you. Shit. I forgot. Hang on a second. Let me just make sure I get the right. Right? Yeah, it is. Here it is. Video explanation. I just posted it in the chat. That gives you a full description of all the functionality of the indicator. But it's not hard. You got you have a buy signal, you take it. The only difference in terms of classification is this is a stronger buy signal. This is a neutral buy signal. This is super trend buy signal. Super trend buy signal happens when prices go super trend. They go 30 basis points above the moving average. So when the moving average really expand, that means there's a strong buying or strong selling pressure. There's obviously a lot of movement. Once they expand to that territory, you're kind of in super trend, and they're going to stay green up until they contract again. So if this stays green for the rest of the afternoon, that means we have a strong continuity trend to the upside in NASDAQ. A very good example of this is now in gold, because gold is all green. You see that? Gold is just super trend category all the way. So it's all visualization of a lot of this quantitative stuff that goes on over here, right? It's pretty simple to, the whole idea is I made it as intuitive as possible, so that you can just react to the signals, because everything else is calculated for you. You let the machines of the programming do all the calculations, and everything else is calculated for you. How should you set it up? So the primary thing, as I said, is the stop loss is always dynamic relative to the signal candle. So in this particular case, the stop loss would have been underneath this candle, right? I start out with basically 2020. If you look at my presets, they're 80 ticks. It's 20 points in NASDAQ, 20 point target, 20 point stop. The reason why I do that is because I want to, if there's a big wide candle, I want to make sure that I'm 99% of the time I'm within the range of whatever candle that comes up. And then I literally visually bring them up, bring them down. I bring them, I scale them up to be underneath the proper, stop level. And then the target level is usually about 60 to 70% of my stop in terms of my risk, right? So it allows me to create nice, clean visual entries. I mean, let me show you. Let's do I'm going to show everybody on a micro contract, of which I don't give a shit about. Let me see if I can. Let me hang on a second. Once the next signal comes up, I'm going to do a micro trade, and show you exactly how I do this visually. Okay, so here's NASDAQ. NASDAQ has got a signal. Okay, so let's go here. Okay, I'm going in. This is a micro contract, right? So what is my stop? My stop would be, it's a volatile day today, right? Today is a day of pretty decent volatility. Generally, I could put my stop underneath this candle, which is the trigger candle, or I could put my stop the next one over if it is lower. So let's say I'm going to give myself this much stop, which is like, 49? Let's say it's 15 points of stop. So then I want to put like 10 points of target somewhere around here. And now I'm just going to basically, let that trade play itself out. Okay. It's probably not going to work because it's a black signal versus a green signal. But, we give ourselves, this is all absolutely reasonable amount of risk against the potential return. I did this on a micro because this wasn't a trade I really was going to take, but I want to show it to you. If it's a $30, $40 loss, it's not a big deal for me, obviously. But I want to show you the mechanics. Does that make sense to everybody? Does everybody understand the mechanics? Thank you for teaching the real stuff. This is what I want everybody to do. The only thing I ask you guys to do, right? I love doing this 4 days a week and 5 days a week when we do non-farm payrolls. I love hanging out with you guys. I love trading, but please bring all your friends. Please bring all your friends, because I trade for real, right? I don't do bullshit. I don't sit there for 3 hours playing music, do one little trade for 5 pips and go, oh, look, I multiplied it 1,000 times through the trade copier. I made $10 on one trade, but it's actually $5,000 because I had 50-50 trade copier accounts on which and then claim I made $5,000. Okay, I trade for real. Every fucking one count, one trade, because the whole point is this methodology of the way I'm trading that I'm trying to teach you. It's good for evaluation. It's good for funded. It's good for real. Okay. I trade the exact same way. The whole idea is the skills that you have here, the kind of techniques and structures, they're there for life. It's all about trading for life, right? And that is how you need to trade. So please bring every one of your friends, 9:30 every day. I'd love to have as many people in the room as possible. That's the only thing I ask. And also go to my friend's Apex's account and please buy a few Apex accounts because they're so cheap and they're so good. It's the best way to learn, right? The best way to learn. So am I going to hit the 57s? I was a little bit, and this is what I mean. So who was it? Somebody was asking me, how do I set my targets? As I said, the target is always fluid. The target moves. The stop never moves. The target is fluid. Like, is this going to be a freaking trade? I'm just going to get out of this trade because whatever. It doesn't matter. I might get the fuck out. because the target just wasn't there. Now, there are a lot of guys in the room who are much more patient than me, who will hold to target, who will hold to twice the target. They may not close every trade like I do, with a win, but when their wins come in, their wins are big. It's all up to you at what kind of personality you have, what kind of, what do you, whether you have a high greed factor or a high fear factor in your personality. You got to know yourself, you got to know what motivates you. There are guys in my room who are very motivated by greed, and they're super, super good traders, greed traders. There are guys who are motivated by fear, like me, who are much better fear traders. I am, like I said, I fly like a butterfly, sting like a bee. I'm just boom, boom. My job is to just punch, just knock you out and get the fuck out. I'm not going to go toe to toe with the market every day, because just not my personality. My favorite action scene of all time. What are the indicators I'm using? Are they available on TradingView? The indicator is my own proprietary indicator that I wrote myself. It's called BFF Scalper. Just like Kathy has a proprietary indicator that I wrote for her called Zip. We both use these proprietary indicators that are not on TradingView. They are on TradingView, but they're invite only. So you could, the only way you could get them is if you become a member of BK. So I'm going to give you a link right now, Bernardo, so you can join us. So if you want this indicator, I'm going to give you a discount link. You guys can join us and use this use this indicator, to your heart's content. All right. So I'm going to leave you with my philosophy of life, which you will understand why I trade the way I do. And it's very important to know who you are to optimize your trading. So that's why I say you don't have to copy me. You just simply have to look at the guidelines of what I trade and then make it your own. But there's this great World War II movie called Guns of Navarone with David Niven and one of my favorite all-time actors, Anthony Quinn, right? And there's this scene there, right? And Quinn is just amazing. There's this scene there where Quinn plays like this. It's all about the Allies try to sabotage this very Crete in Greece, right? I don't know if anybody ever seen the movie. It's amazing. It's a great World War II movie. And it's very, very important that they had to blow the Nazis out of Crete. And Crete was this impenetrable. It was actually based upon real life story. It was a true story. And so, Quinn plays, because Quinn can play anything, but he was playing this Greek peasant, right? And they get caught by the Nazis. And he's like, this Nazi commandant, very, very arrogant, like standing in front of him. And Quinn, oh, I'm so sorry, sir. And he bends down and he's on his knees and he's practically kissing his boot. And the Nazi relaxes for just 1 second. And Quinn takes out a knife and just stabs him the fuck to death. And the guy dies. And that is literally my favorite action scene of all time, because that is exactly how you want to fight. You want your enemy to be so arrogant and so stupid as to let down guard and kill him quick and fast and easy. So that's how I try to trade. That's just my point of contention. So great movie if you guys want to watch it on the weekend. I love it. Thank you guys. Good trading. There's more signals to go here. This is a pretty good signal over here, probably for us to take. I'm going to pass up on it because I got to go. I got a meeting with Kay. We had a really good session. I think let me see where I'm at. I don't even know. Hang on. What do we? Yeah. Oh shit. $500 since I started trading with you guys this morning. Good job. And probably more to go. And just nickels and dimes. They really add up, just totally adding up. Really, really good. All right, my friends, so much fun. Another great NFP for everybody. Everybody on Twitter, you bastards, you better come over here to YouTube, YT/BK Forex if you want anything. Oh, I'm going to entice you. If you want to come over, I'm going to give you right now 2 free indicators. The ones that the first trend indicator, which is just shows you the let me see if I can do this. Okay, I'm literally giving it to you right now in chat. So if you are on if you are on Twitter, get your ass over here into YouTube in chat. Links for free to my other proprietary indicators, which you can use for sort of single trade action, a breakout indicator and a first trend indicator in there. But the BFF, which is the continuous signal trading indicator, please come join us in BK. We're happy to have you. Thank you very much, guys. Everybody have a wonderful, wonderful week. We'll be back on Monday. Kay is going to do her Monday open, so we'll be ready for the week. I hope you guys really enjoyed all of this. Thanks again. I'm glad everybody banked it in gold. Gold was the money trade today, and NAS is looking pretty good too. This particular trade failed. I didn't take it, so it's fine. This particular trade failed. We'll have to see if this is sort of all she wrote as far as equities go, or whether this is just a positive refreshers. But regardless of how it is, we'll wait for the signals and trade them as they come. Rest of the day should be just as much fun. I'll see everybody on Monday. Everybody enjoy. Have a great weekend. It's been a very good week for all of us. Enjoy. Bye-bye, guys.